I like sharing on social media because that is a crazy way that people vet you. It's
Yeah,
insane.
yeah.
It used to be people will go to your website. No, now people go to your social media platform and scroll and see the kind of person that you are.
Right.
And so be who you are everywhere, in person and on social media.
Welcome to Teach Me Real Estate Investing, a show where I share my personal journey and the challenges I face as an investor. I invite industry experts to share their wisdom and advice to help me overcome these adversities with the hopes that it'll help you on your own personal journey. I'm your host, Saugat Ghimire, and I hope you enjoy the episode. Hi everyone, welcome to today's episode. Today we're lucky to have with us Tereva Jacobson, and we're going to dive into hard money and private money lending. With that, Tereva, welcome to the show. Thank you so much for being here.
Thanks for having me, Saugat.
Yeah, so before we get started, could you please tell the audience a little bit about yourself, how you got started in real estate, and where you are in your real estate investing journey today?
Sure. First of all, an honor to be here. I love talking about real estate and share my journey. If it helps one person out there, I am thrilled. I am originally from Tahiti, but I moved to Maui in Hawaii in early 2000s, right after high school. And honestly, so I have a dancing background, so I'm a Polynesian dancer, did that most of my life. And in 2017, I kind of got a bit serious about real estate investing. I bought a mentorship, but I didn't take action until 2020 when my husband and I decided to make a drastic change in our lives, and I needed to be more present for my daughter. So in 2020, I went full time into real estate. And in 2020, I did 2 wholesales. I did what's called reverse wholesaling. And in 2021, I started buying rentals and did a couple of flips that really propelled me to take a lot more action in 2022. I can't tell you how many properties. I mean, I could if I counted, but right now we are at a total of 18 doors. That is condos, duplexes, single families, triplex, and as of last week, we just closed on a fourplex. And yeah, that's about what my real estate journey and my background is about.
That's incredible. So you started in 2020, and in 2 years you were able to acquire 18 doors. And you said you're closing on 4 more, or does that count in the 18?
That's part of the 18. We are also closing on a 13-unit multifamily.
Yeah.
At least we're under contract, just kind of going through that. And the escrow process and getting to the closing table it can be quite a task, especially with like your biggest deal to date, 13 units is a lot.
Right. When you first got started, you said you did 2. What are reverse wholesales, by the way? Could you just give us a brief overview of
Yeah.
that?
So usually wholesaling is you get a property under contract and then you look for buyers. Reverse wholesaling is you actually have your buyers in line and you find out exactly what their buying criteria is. And then you probably just market to what they want to buy, get good at negotiations, get it under contract, and you sell to like these specific buyers with whom you've built relationship. You trust them to close, within the timeline that you promise your sellers and such. So it is, there are pros and cons about regular wholesaling and reverse wholesaling, but that's just how I started. And by doing that, I was able to learn a lot about real estate investing and marketing and negotiations, and because I was really hands-on with my end buyer.
Yeah, that's awesome. So how did you? So like I feel like I've been educating myself for a while, but I didn't really think of this reverse wholesaling strategy, right? How did you even come across this? Was this something you learned through that mentorship program, or? Yeah, I'm just very curious.
It was actually by accident. I didn't even know it was reverse wholesaling until I saw a video later on. I'm like, oh, that's exactly what I did. That's what it's called. Yeah, I didn't. I mean, there was just not a name for it when I was studying real estate and learning all of the ways to wholesale or flip. And it's just it was by accident because a buyer reached out to me, so it was a little different, you know.
Yeah. When you first got started, what were some of the challenges that you initially faced, and how did you overcome those?
The biggest challenge for me, in my story, that's not for everyone, the biggest challenge was mindset. And I never believed in a thing that I was able to accomplish in a couple of years. I was in a lot of debt. So it's just the compilation of what your belief system is made up of that just doesn't give you the confidence to talk to sellers and invest money into marketing and networking and education, you know. So mindset, like now looking back, mindset was probably the biggest challenge. And again, looking back, when I take a look at the few things that I did, today they're very little things, but back then it seemed big. Like these challenges seemed big. Money, for example, I started real estate investing with a huge debt to my name and never thought I would pay that debt off so quickly. Never thought that I could buy an investment property, honestly. So I thought I was going to wholesale for a really long time. But it's not the case, and that belief system, you know. The other thing was my environment, or just, you know, I had different friends, not that they're bad friends, but I was just not surrounded by real estate investors who have been through what I've been through, who have been through worse. So I wasn't hearing encouragement on almost a daily basis. You know, it was just friends, coworkers, and such. And it was a bit difficult with my husband because of the initial investment. You know, it all came out of pocket, which is why I was $150,000 in debt.
Right. Yeah. I just want to touch on mindset a little bit, just because that's something I struggle with myself as well, and I think a lot of people do. This is my first year in real estate investing, and so, you know, I have been educating myself. You know, I'm now in a mentorship program, so, you know, I know these things are possible, but you know, I work a full-time job and I'm doing this, and there are some times when things get busy, especially, where I'm like, am I just wasting my time? What am I doing with my life? Am I even, you know, made to succeed? So what are some things that helped you get over those mental hurdles and, you know, believe in yourself?
I only spoke about my challenges to the right people. So people that were probably 10, 20 years ahead of me in real estate investing. That's it. And they faced the same or similar challenges of self-belief, of, you know, potential. And the ones who are, you know, have the patience to walk you through it are, you know, really key in your progression and that ladder kind of that you climb in your real estate journey, because they've been through the same things. Issues with your family, somebody's been through it. Issues with money, somebody's been through it. And, you know, if they're patient enough, they'll walk you through many things and help you see the light. And and also, you know, sometimes I'm inspired by my friends who started right just where I was, and I see them today and they're thriving. And we all know that it is just kind of like possible. I know a lot of newer investors always talk to me about money. I don't have enough money. I don't have enough money. And I don't know what else to say to I was 150K in the hole, like, and somehow, like, how do you think I did it? Like, you
Right.
know, I there's definitely not even skills. I don't know. It's just this whole mindset thing is
Yeah.
incredible. Once you kind of grasp it, it does change a lot. So the right people around me, and I just really stayed active. And I didn't have a full-time job then, but I was always able to attend meetups, whether in person or virtual meetups, and I made it a point to always attend because it kept me involved. Every single day I would hear about real estate investing one way or another, and I just kept going. I can tell you it took me months to see money, months. And the first few $1,000s that I made, I didn't touch it. I invested right back into the mentorship, into real estate, because I knew that 1,000 here, 3 grand there, 5 grand there, back into marketing and more education would allow me to probably 5x the next year, which it did. Somehow I trusted that and I did it, you know. So I did not look for the quick money option. So a lot of people, sometimes they're just so eager, which I understand, eager for the deal, eager to see money, eager to achieve a contract and such. I really understand, and eager to start like feeling the benefits. But I mean, I know a lot of people say it is a lot harder than as to say it. Like, easier said than done. But it works. It worked for so many people that I know. So it's like the delayed gratification that can be hard as well.
Yeah. Let's talk about money, right? That's the topic for today, and I think you mentioned that a lot of people struggle with this. This was the same thing I struggled with, which is why I sought out my mentor. The first 2 properties I bought, I used my own money, and then I didn't have any more. And I'm like, well, I can't scale, but I made it my goal to pursue this, and so I sought a mentor. So for folks who are in the similar mindset that they don't have money, they can't scale, could we talk about, the solutions that they should pursue or they should be aware of that could help them scale their business?
So one of the secret weapons of real estate investing is private lenders. That is friends, family members, acquaintances that you connect with who know, like, and trust you, and who will trust that you are a good investment for them, and they will lend money to you. Again, easier said than done, but it's a matter of taking action, building credibility, and we build credibility by taking action, not by getting deals. So yes, private money lenders are our secret weapon. And private money lenders are who we get what we call gap funding, which is usually the down payment and closing costs, maybe a portion or the entirety of the rehab. So we raise the money from private money lenders. Now, if you've got a $50,000 deal, maybe one person is needed to just give you everything you need. If you've got a $500,000 deal, maybe you need to raise capital from a couple of different private money lenders. So it really depends. And the way that I use private money lenders is to cover gap funding, which is down payment, closing costs, holding costs. Sometimes the rehab, it really depends on the numbers. And so that's one way. The other way is a lot of investors think that a lot of newer investors think that conventional lending is the only way to buy properties, investment properties. It's not. There there is this thing called DSCR. It's a debt service loan. You receive money based on the asset, meaning what the asset can produce financially, and that's mainly the value of the asset, like compared to other homes that's sold in the area, as well as the income that the asset produces, meaning rental income. If you've got a coin operated wash and dryer in there, or laundry set, they'll take that into consideration. So all of these things are out there, they're just not talked about. And then I also realized that when we raise private money from friends, family, acquaintances, when we raise private money, we are actually offering our private lenders the opportunity to make a return on their money. So some deals we can offer 12% return. Some deals we can only offer 8% return. For someone out there, it is better than what they're getting in their savings account. It is better than what they're getting in their 401k. So they'll invest with you if they know you, like you, and trust you. So I always tell my private lenders, or anyone who's wondering about private lending, whether they want to become borrowers or lenders, that the relationship between a borrower and a lender, and for a deal to happen, is not only the deal and not only the investor. It's both. So in my opinion, in certain situations, scenarios, or for certain deals, it is best to vet your private lenders, like potential private lenders, and talk to them and educate them on the risks, the potential, the paperwork that it requires, the kind of commitment that this is, because sometimes you don't see a return for maybe 8 to 12 months, because it's going to take that long to sell a property, right? Each project has a different timeline. So yeah, let's see what else.
So I want to touch on hard money as well, right?
Yeah.
Go ahead.
So hard money lenders are also lenders who lend based on the asset, not necessarily on you, the borrower. Proof is I was able to borrow when I was $150,000 in debt. Like, what conventional lender would possibly give me that? A hard money lender will do that if you kind of meet like their credit score criteria. You know, they don't ask for proof of income. They analyze the way that you analyzed your deal. They'll analyze it as well. They have their own parameters and such, and underwriting procedure or process. But it's happening. It happens for everyone. So hard money lenders, I think a lot of newer investors do not want to use hard money lenders because rates are so much higher. And to that, I say, if it works, if you count for the interest rate, even if it's 10 or 12% in your deal, and you still make money, why wouldn't you use that? They can close you in 30 days. Some can close in like 2 weeks. So why wouldn't you use them if you're still making money at the end of the day? Because some sellers are in distress and they need to close in 2 to 4 weeks. Otherwise, they're facing a difficult situation, whatever the case is. So everybody will win if you can close with a hard money lender. So yeah, that's what I say to that. So private money, hard money, and hard money lenders do offer DSCR loans as well if you want to do long term. So with hard money lenders, they offer what's called a bridge loan, which is more of like the fix and flip, more for fix and flips. And then they offer longer term loans. Some are called DSCR loans.
Yeah. When you first have a deal on hand that you're like, hey, I need to finance this somehow, is there one that you tend to gravitate towards? Is there one that in your mind is, hey, I'm always going to try this approach first, and if I'm stuck, then I go to other options?
Yes. So because I've worked with like a couple of hard money lenders several times, I kind of know their underwriting process, what they require, what they like to see in the deal. Therefore, when I get a deal and I analyze it myself, I know which lender to go to or which lender will fit best.
Right.
Also, not all lenders lend nationwide, so it also matters where you lend. However, I have like one main guy. That hard money lender is my go-to, and if I can't make it happen with them, I'll go somewhere else.
Yeah, I guess my question was more so hard money versus private money, right? Like you could either go and raise the money through private lenders, or you can go to a hard money lender. I'm just trying to evaluate if there are pros and cons to those two approaches.
For sure.
And what I should think about when I consider financing my deal.
Okay. So I will preface this with, I usually 90% of the time, my deals are structured with a hard money lender, and then I bring in a private to cover gap, rehab, whatever. Okay?
Yeah.
So I usually start off with hard money. Rarely do I go all private, but I've done it. Now, pros and cons. Private money lenders, they are people. So my pros are, it's a person making money. It's not an institution, a business that has overhead and who has to pay a bunch of like commissions and such, right? So private money is that, and usually it's a relationship type of agreement. It's not paperwork, black and white type of thing. So and I like that my friends are making money alongside me,
right,
rather than a big business. So the cons maybe with private money lending might be that maybe their interest rates, their terms might be a bit high, but sometimes it's better to go private. The other pros is a lot of lenders have like really strict rules, and if you don't check it all off, like you can't get the deal done. The pros with hard money lender is, especially when you start doing more deals, is just what they like to see, and once a deal fits their checkbox, boom, you can take it to them. For a brand new person, you don't know what you don't know, right?
Right.
You're gonna play with a bunch of them. You're gonna do one deal with one. It was horrible. On your next deal, you're gonna find someone else. It was great. You're gonna keep going back to them. Luckily for me, my very first deal, it was amazing with this one lender, and I've stayed with them for everything that I can finance with them, I do. So here's the one cool thing. Not every hard money lender is this way, but my hard money lender only checks credit once a year. So once a year, I need amazing credit. The rest of the time, it's not too crazy. I can max out my credit cards until I sell my flip or whatnot. Private money lenders, no credit check whatsoever, unless some might ask you for it. But again, private money lending is relationship based. Some hard money lenders out there, they do a credit check for every single deal that you bring to them. So I'm not really a fan of that, because I would like to keep my credit in a decent spot. I will need it eventually. But so these are kind of like the pros and cons of using private and hard money.
Yeah, when you do private money, this is a relationship between you and another person or another, I don't know, family or something. Someone, it's a person,
it's someone,
right?
Yeah.
Right. How do you go about structuring the deal? Do you just offer them a flat, I'm going to give you an X% return on your money? Or is there some sort of equity built into the deal as well? I imagine most of these are for flips, so I don't know how this that would come into play. But like, could you talk a little bit about how you structure it, and what has worked and what hasn't worked for you in the past?
Okay, so all of the above and none of the above. When you structure a deal with a private party, you, as the investor, you may have like a set or like preferred terms, but then all of this is negotiable, which you can't do with the hard money, right? They have set terms. So there are 3 parts in what we call terms that are negotiable, I would say. The first one is the interest rate, the APR, that your private lender or the private party will earn, APR. The second part is the length of the loan. There are deals that will take 6 months, deals that will take 24 months, right? The bigger the deal, usually the longer you'll need private funds for. So that's 2. The third one is what the repayment plan is. I've done it all. I have private lenders who want to get paid and get a cash flow every single month. I've got private lenders who are like, no, when you sell, when you refinance, pay me. I've got some who want to get paid quarterly. And I even have some who asked me not to pay them at all in 2022. They'll just get like, they're like, okay, January 2023, pay me, because they just didn't want to report like so much income. So I'm not going to pay them until 2023. So there's all of that. And this is the beauty of private lending, because all of this works out. Now, as far as equity, there's a couple of things. You, as the investor, no matter what, the terms have to work for your deal. Like, everybody needs to make money, right? And you, as the investor, you not only risk the most because the deal's under your name, the insurance is under your name, right? Like, you are the one risking the most. And you are offering an opportunity for friends, acquaintances to make money alongside you. When a private lender asks for equity, that private lender needs to truly understand what that means. An equity partner rides the wave of the asset. Asset does well, they do well. Asset doesn't do well, they don't do well. Asset does negative, they do negative. So to make sure that the relationship with the private lender is clean and is a long-lasting relationship, I've got a bunch of repeat private lenders to make sure that that is not compromised. I make it a point to keep people as private lenders and not equity partners, because things can get ugly when people lose money, as we all know, right? Especially if they just sent you, like, not necessarily their life savings, but it could be, like maybe they took 10 years to build an amount of money here, and that they're lending that to you. That's 10 years of their life, right? So to keep things clean, amicable, I'm like, you want to stay as a lender. You will always make money as a lender. As an equity partner, you may not make money. I've had people ask me that they want to make cash, like a cash flow and APR and equity. I think that's a bit, again, it depends. Maybe the deal will work, but I that's also a dangerous play for you as the investor. And also, I don't know, it's just equity partnership become a partnership. So you have to understand that you're kind of marrying this person. Like, are you ready for that? Are you ready to be married for the length of your deal, right? So does it work for the deal? Maybe. And, do it and then learn from it. Does it work for you? Great. You'll do it again. Does it not work for you? Then don't do it again.
Are there certain things you would avoid certain people or certain lenders that you'd avoid taking money from? Like, have you ever said no to money? And I guess could you talk a little bit about that? Like what I should look out for, right?
So, and I will say that this is just me as Tereva, how I invest and how I borrow money. Because I am huge on reputation, Hawaii is really small. I burn one person, I'm pretty much done, right? So I don't want to ever do that. So I will not take money I will not take someone's life savings, honestly. I always ask, I'm not sure what you are able to lend, but you must have an emergency fund. You can't lend that. And I say this because it's happened to my friends where something happened and they needed their funds out of a deal. And it can take 2 to 4 weeks maybe for us to re-raise the funds. If we don't have those funds in, sitting in our bank, it may take some time to pay these people back. Therefore, I want to make sure that someone's not lending me their life savings or their emergency fund. The other thing is we have to be aligned, and that's just me, meaning if this is a 12-month commitment, it needs to align with your goals. Clearly it aligns with the strategy that we have, the plan with this property or this deal. Your funds align with that, but do we align with you? Our names somewhat will be attached. Like, I want to make sure that you'll take pride in doing business with me. Like, you'll be ecstatic to have done one deal with me, so I take pride, I put priority on that. Communication is huge. You have to be able to have the hard conversations. Hard conversations are, hey, I need more time. I'm not able, the project went longer, the market is shifting. I'm not able to get you your funds within 12 months. Are you okay if we extend this? What would this require? And that's not always an easy conversation to have. Or, which I've heard things, it hasn't happened in my business, but I've heard of other stories where the deal didn't turn out as well and there's no money for interest. They'll reimburse the principal, but there's no money for the earned interest in the deal. I'm not a fan of that, and I don't ever want to have that conversation. I'm just saying it's a possibility. We have to be okay with communications. And the other thing is, I come across a lot of lenders who want to learn at the same time, and they're, in my opinion, they're kind of looking for some kind of mentorship, guidance, and they have direct access to me, right? So one thing that I personally ask is, if they're looking to make money and for mentorship, I just ask for a bit of a discount on the APR. That's all. Like, if you're going to need an hour from me every week, 2 hours from me every month, like, let's just make something that works, because as we all know, I'm going to give up time with my family or time looking for deals, working on deals and such. So by sort of like mentoring and guiding them and helping them analyze deals. So with private lenders, it's so relationship based for me. Not all investors are this way, but for me, it's relationship based. And let's see what else. Communication, being able to have hard conversations. What could go wrong in the deal? Are they okay with that? Like the things that would go wrong, We're all taking a chance here. So let's make sure that we're all well with the risks that we're all taking.
If someone is investing with you and you're like raising money for a flip, for example, is their money in any way tied to that house, or is it just solely just a relationship, just a deal between you and the lender? If you're getting value from this video, I'd really appreciate it if you could hit the like button and subscribe to my channel. It'll let YouTube know to put this video in front of more people so that they can also learn something from it. Thank you, and let's get back to the show.
Okay, so it depends. There's this thing called second lien position.
Yeah.
It's a bit tricky, but when you sign a promissory note, this is for lenders. Excuse me, if you sign a promissory note, you want to see an address somewhere, because that makes that promissory note a recourse promissory note. If there's nothing, if it's just give me money without a goal or without a recourse, it becomes a non-recourse and you can't even take that to court. So the other thing is us as the investor, we can put their name as a second lien position on the deal. Again, if a private lender is funding an entire deal, they get what's called first lien position. Like, it's not automatic. Like, you really, if you ever want to become a private lender, I suggest that you learn about it a little bit. There are books out there. Actually, Bigger Pockets has something.
Yeah.
I forget the name of the book.
I guess in my situation, I'd be raising from friends and family who may not know these things, right? So I want to make sure that they feel comfortable lending me money. And I don't expect them to go out and educate themselves on what's required to be a private lender, right?
So it's
so
your
I guess in
job
that
to
situation,
educate
right,
everyone, and make sure that, it's like, you don't have to invest with me, but if you are ever going to become a private lender, please know your risks and benefits and or potential return, but put these things in place. Everything's got to be on black and white. You have to sign a promissory note. If you want a lien position, know that there's additional paperwork that happens, and you usually have to sign some things. As a private lender, it is never recommended that you wire money to the borrower. You should be dealing with a title and equity office, company. Yes. So this is for private lenders, usually at least a lien position would be that. So if the way that I do most of my deals, I've got a hard money lender and then I raise private, I put them in second lien positions.
Got it. Okay. Yeah, that's awesome. Something that you've mentioned a couple of times, especially like earlier in the podcast, was know, like, and trust, right? You want people to know, like, and trust you. What are some ways that I can do that I can accomplish that? I think one of the things go ahead. Yeah. One of the things I struggle with right now is, I'm somewhat new. I only have 2 properties. I haven't undertaken a flip before. I don't have a lot of credibility, right? How do I convince a private lender that they should come in on this journey with me and lend me money, right? So I think it's really those 3 things. They need to know, like, and trust me. And yeah, I'd like to hear your advice on that.
First of all, you are not new. You own 2 properties.
Right.
You have no idea how many people wish they were in your shoes. So no, you don't have no experience. Let's get that out of, let's make that clear.
Yeah.
How do you get people to know, like, and trust you? In my opinion, be yourself. Put yourself in the shoes of a private lender. What would my ideal private lender want to see? And I think transparency, honesty, it to me that works better. So to get to know you, I don't know how to explain this, but being yourself, whatever that means to you, are you a fitness junkie? Are you a family man? Like, whatever that is. Are you driven for, like, anything that feels like you? You be it. You don't need to lie. Like, lying your way through anything is just exhausting, in my opinion. People need to, they want to get to know you, and, like, just sharing. I mean, I speak a lot about this on social media. And I don't want to say that I'm loud on social media in like an obnoxious way, but I like sharing on social media because that is a crazy way that people vet you. It's insane.
Yeah.
It used to be people will go to your website. No, now people go to your social media platform and scroll and see the kind of person that you are.
Right.
And so be who you are everywhere, in person and on social media. And that's how they get to know and like you. How do they trust you? You build credibility in anything and everything that we do. I truly believe, you know, like, I don't know. I can only give you my personal example. I'm a mom, and like my daughter is my world. I'm a dancer. I've been dancing since I was a teenager. I was born in a dancing family. Like that, like, it's so true that will never change, you know. So that's pretty easy. Like, just be you.
Right.
I know that people say to stay out of, like politics and religion, because I'm just not that. I'm not religious, and I don't know enough about politics. I learned what's needed, and whatever, you know, that's not everyone. So I probably wouldn't really I don't get into anything that's not me. So as far as credibility, in my opinion, it comes from taking so much action. And I've had private lenders who I'll take to my projects, like whether they're lending on it or not. I'm like, hey, if you are thinking about being a private lender, or, you know, like, do networking things, teach people. So on social media, I love showing how much I do, which I do, you know, I'm blessed to be doing this full time. So what I do, with whom I do business, it's just everything. And that's how you kind of build, you know, how you build. And it works because I've been approached by total strangers.
Yeah.
And we still have somewhat of an onboarding call with private lenders, you know, so I can go into more details. Like, social media is one thing. You see what you see on social media, and then I do an onboarding call and I just go over a little bit more, whether it's my experience or my life, like whatever the case is. I just want to be really, really transparent, and I want them to know who they are doing business with. One thing that I don't like is being questioned, having my integrity being questioned, or them having questions. So I like, and honestly, after doing a few deals, you kind of learn what to ask. So for newer investors who are listening right now, you don't know until you do it. You can learn from 10 different investors. They'll tell you 10 different ways of finding private money, and they all work. But what will work for you is for you to find out. You can raise private capital on social media. You can raise private capital in person. You can raise private capital at the Thanksgiving dinner table. Okay, so what works for you? I can't do it at Thanksgiving dinner table. I have no family here, so that's not gonna happen. I leverage social media as much as possible. I'm in mentorships. I leverage my mentorships as well. So that's how you be you, and that's how the right lenders come your way.
Yeah, that's awesome. Yeah, I follow you on Instagram, and I think you have some awesome content, and I feel like, you know, you've been quite successful on that platform. Do you think there is something you do or something you've done that has led to that success, or do you think it's just... I just want to hear, like, as someone who is trying to grow and establish my own credibility, what are some things that I should keep in mind when pursuing that?
Being consistent.
Okay.
And again, if you were a private lender, if you were giving someone $100,000, what would you like to see? And you provide that. yeah, it's really, you're gonna attract the right people being that. On social media, it's a lot about value and a lot about being able to make connections on social media. I've made friends on social media. People I've never met, and we've somewhat done business together of some sort. We've shared, we share things in common, and then we end up meeting in person, which is amazing. So it's very it's on social media, the web is very vast, and
yeah, that's awesome. I think one last thing is, I feel like, just hearing you talk about all the things you do, I feel like there's a lot, right? You're a mom, you're a dancer, you're spending time with your family, and you're doing all this real estate stuff. Do you have any tips on how you're managing your time and managing to balance all of this? Because sometimes I feel this is something I struggle with, where I have my full-time job, I want to have this real estate stuff going, and time management is something I struggle with. And I'd like to hear a little bit about, how you think about it.
Discipline and consistency, to me, go hand in hand. One creates the other, and it's just like that, like back and forth. Taking action creates momentum, which creates consistency, which creates discipline, and which creates results. Time management it can be crucial. I pretty much time block my life. I let go. I've learned, especially this year, scaling at the rate that I've scaled. I truly believe that it's hard as a mom to scale, and owning another business and having multiple responsibilities. But letting go of control was huge, and I wouldn't recommend it right in the beginning, but I think you eventually get comfortable and make the right connections and build the right teams to start like letting go of control. But yeah, time management is huge. Anything that will work for you, you need to do. And for me, I will say that I was doing things quite blindly. I set goals like make 200 cold calls every day. And I was literally on a post-it, and I counted, how many cold calls I made. And then it became like really easy. And then, no, like within 3 or 4 months, I got something under contract. So when you get that result, like it just makes you want to do more. So I don't know how you got your first 2 properties, but I know that it takes work. Building your savings account. I think we all have what it takes. It's a matter of using our strengths and placing them where we are most efficient. Time management, some people use Google Calendar, some people use an Excel spreadsheet, some people use a paper journal or calendar planner. So whatever works for you, what kind of, what will make you be consistent? Is it a letter to yourself in 1 year? Dear me, 2024. This last year has been amazing. I bought and sold 6 fix and flip, blah, blah, blah. Like, is that, and then you leave that at your desk? Like, is it, honestly, I think it comes to what works for you. It's my best advice. Awesome. Sorry. I wish I had more.
No. I think that's very valuable. So for folks who have listened to this podcast and they're now excited about real estate and they want to get started, do you have advice on, what a new investor should be doing if they're looking to get into real estate investing?
My best advice would be to apply, aka take action, everything that you learn. The danger there is that if you learn too much, you might be applying too much and therefore not being able to focus on one thing. We have to learn. We have to get an education, whether that's a mentorship, YouTube, podcasts, books. Education is out there. Free and affordable education is out there, but it is what we do with it, right? Parallel to that is focus. I remember listening to the Bigger Pockets podcast when it was still like once a week. I forget what day it would come out. I would listen to it, and then the guest that they had on was a multifamily investor, and I was like, oh, I want to get into that. The very next week, they've got a single family fix and flipper. I'm like, oh, I want to get into that. That is so bad. So taking action, applying what you're learning, but with that, like knowing what your goal is, and this is why a lot of my friends get into goal setting this month usually, and I usually do it like at the very end. I like my time off and taking my time to set those goals, and we just set out the goals for the next year, and this is where I want to be in a year, 3 years, 5 years, whatever the case is. And what do you use in real estate to get there?
Yeah.
For example, my very first year, I wanted to pay off my debt. How do you do that? Probably fix and flips. To pay debt off like the fastest way possible, it's usually fix and flips. This year, I wanted to build my rental portfolio. What do I need to do? Probably raise more private capital, probably connect with more wholesalers, like whatever the case is. You know, there is a way in real estate to achieve what you want. So by knowing what you want, you get to figure out what real estate strategy will work for you.
Yeah.
If you want to quit your W-2 job in 3 years, you need to build cash flow maybe, and that will equal your W-2 job or beat it. So how do you do that?
Right.
What is that gonna take? Boom. Then you figure that out. In 5 years, you want to travel the world and make $100,000. I don't know, $100,000 or $200,000 a year. What do you do in real estate to generate $200,000 a year? What does that look like monthly, weekly, daily? And do that. Yeah. As the one thing that might be hard for me to speak on is having a full-time job and doing real estate investing, because when I had my full-time job, it was super hard. I quit my W-2 to pursue real estate. However, I had another business. I have a dance school that sustains me not having a W-2. And we did make a lot of sacrifices in our financial lifestyle to allow that. So, you know, there was a give and take there, but we are so happy that we did. We made that decision. Meaning, when I say we, as my husband and I.
Yeah, no, I think your story is truly inspirational. I'm a little curious about the next steps for you. So what is your ultimate goal that you're working towards, and what do you hope to accomplish in 2023? In 2023, I will probably focus on multifamily investing, bigger deals, and I know what that requires, and I'm going to build that and achieve that. Also, we're going to generate some active income through fix and flip. So I feel like fix and flips are good to generate income and always have like this good cushion, but put that into some long-term, you know, not only the cash benefits, but the wealth building benefits. And I don't know, maybe I'll find my primary residence this year. I'm not sure. Yeah, that's awesome. I'm excited to follow you and follow your journey, and for folks that are listening to this podcast that also want to follow your journey. Where can they find you?
I think the easiest way would be to find me on Instagram, Tereva Invests. I do check my messages. I do take a while to get back to people sometimes. But yeah, especially I'm the type to leave things unread until I can really address it. So, and because I know myself, once I check something and I get distracted, I never get back to people. It's horrible.
Yeah, that's awesome. Yeah, I learned a lot today. Thank you so much for being here. I'm
so
excited.
welcome.
I am
Thank
ready
you.
to go start. Yeah, I'm ready to go start raising private money and expand my portfolio. I think your story, it makes me feel like I can do this too. It makes me really believe. So, thank you so much.
Absolutely. I'm 500% sure that I have no doubt. No doubt. Whatever it is that you want to do, you'll get it.
Thank you.
Put the work in, you'll get it. Yeah.
Thank you. All right. See you next time.
See you next time.
All right, that is the end of the episode. I hope you enjoyed it. And if you did, please hit the like button and subscribe to my channel. It would really help my mission of teaching more people about real estate investing. Thank you, and I'll see you in the next one.